Welcome everybody to this SBS webinar on the ROI in football. Let me just give you some background, some flavour as to how this all came about. There was a post a few weeks ago now, I think, on the group chat when Chris Wilder had been fired as the Sheffield United manager, even though he had posted a plus 19.7 points XP, the best in the championship. This, the post contended, was a great return on investment. This caused a furore in the chat, in the group. There was posts left, right, and centre that said the ROI can only be financially related. Others contended, actually, no, softer metrics such as brand can be included. And with fleetness of foot and swiftness of thought, our great leaders at SBS decided that they would stick a quick poll up to ask the electorate if they fancied a seminar, a webinar on the topic, and today is that day. You've got a great panel in front of you. I shall introduce them all in a second after I've talked about me. My name is Sanjay Murthy. I was a really bad entrepreneur for 30 years, and I decided, and it took me 30 years to work out that my true calling was to be a sports broadcaster, an author. My book, Any Given Saturday, is available on Amazon. I'll just pause there while you write that down. Thank you. And an events host. And my role here is to keep your great panel in some sort of order and ask some reasonably sensible questions occasionally. Our panel is led today. So the first of our panelists is Adrian Bevington. He has held senior management and board positions at the English FA, at Middlesbrough, a place he likes so much he went there twice, Nottingham Forest and Aston Villa. He's currently at Pro Profile, a player talent agency, and prior to that also an interesting background in consultancy, working with Andrea Rattizzani when he bought Leeds United, and the Eisner family when they acquired Portsmouth. He's also currently, as he told me this morning, working with Revolution Sports Investment in an advisory capacity. Tony Davison joins us, a face familiar to a lot of us. Commercial and operational expertise is what Tony brings, and he has had a role in shaping a number of clubs whilst at Tottenham and Sunderland. He's also worked in a consultancy capacity at Charlton, a football club that seems intent on stealing as many players from my beloved Luton Town as possible, and is also currently helping Plymouth Argyle in their commercial expertise. He brings a clear head and experience in sometimes chaotic world of football operations. Amber Pinto Capital, works in M&A, financing and ownership strategy from the English Premier League through to the National League. She has a keen interest in the women's game, especially its commercial value. And finally, and definitely not leastly, which is very much a word, I welcome Megan Hessian to this webinar. She's the ex-CEO of the AFL, the Aussie Rules, in Europe, and has worked at a number of family offices across governance, due diligence, advisory, research, policy, etc. She's owned a crisis management agency and currently heads up Crux Football, which is an MCO that invests in the women's game alongside Bex Smith. So welcome everybody to this webinar. So obviously the topic is ROI. And investing in football seems like a strange thing to me. I mean, I know very little about investment, but the little I do know suggests that if you looked at the P&L, that bottom figure needs to be reasonably positive. And if you read the popular press, or if you, read posts that go on SBS, for example, you'll see that that isn't always the case. Yet from the East, you got sovereign wealth funds. From the West, you got Hollywood superstars. The local man or lady who has done good in a local town no longer owns their football club. So, Adrian, let's start with you. What is the appeal? What is the appeal in investing in football clubs?
Well, there's a multitude of layers as to why people or organisations or states would want to invest in football clubs. There is obviously the possibility of growing significant commercial revenues on the investment that you make. If you are a venture capital group, or a high net worth owner, you can do it that way. There's obviously soft power for those that are looking to grow the reputation of the nation or awareness, influence. We also have many high net worth individuals or groups who are in it for sporting success on a more purist sense. And then you've got other people who may be in it for more of an ego
Yes.
approach. And hopefully there's a hybrid of that in which people are looking to combine the commercial success with the business operation, allied with the success on the pitch, which, while it's very challenging and competitive to achieve that, it is still possible if you manage to get everything set up correctly and have a good wind behind you.
A good win, yeah. I mean, that's. I think with the influx of East and West, that's probably a good analogy to make. Amber, from the investment side, how do you see that? What do you think the appeal is as far as investment is concerned?
I think that investors approach their club with different reasons, and I think that ultimately the ROI for them will depend on their goal and as to what they're looking to get out. Say, when they come to leave the club, what would they have achieved, whether that's everything from building a brand to perhaps transferring players successfully or developing an MCO or something. And I think it's very case by case basis.
Speaking of MCOs, Megan, obviously you're involved with one with Bex.
Yes.
How does that relate to your strategy, if you like, or your philosophy around these things?
So I can only speak to the women's game right now. I've got about 22 years in the men's game, and I fail to see how there is an ROI in the men's game anymore, unless you're looking at a model like Brighton Hove Albion. Men's football to me seems like a vanity project for a lot of people. And again, I'm an American, but I have lived here for the last 20 years. And there doesn't seem to be a massive revenue stream outside of, say, transfer fees. You know, what's going on that's unique. But on the MCO model for the women's game, we're going in for massively undercapitalized assets. So,
Megan, just to interrupt, just so we can set the stall out clearly for everybody. Not everybody will be familiar with what the term MCO means. So could you just explain that to everybody, please?
Multi-club organization. We believe that there is a benefit. And again, we've seen that this hasn't worked brilliantly in the men's game. But in the women's game, these very, very undervalued, undercapitalized assets are going to benefit from a shared service scheme, and that comes from the management level, and we're player-led MCO, which is probably the first player-led MCO by Beck Smith in European football, but also shared services from commercial pan-European deals to financial to sports science to player transfers.
Tony, would it be fair to say that you are a bit of an outlier as far as this conversation is concerned, given the fact that you come from more of an operational, I know, Adrian, you've had that background as well, but from that commercial and operational level, I think we run the risk, Tony, don't we, that when we talk about an ROI, it tends to be just about capital in, but there are other ways of creating a return.
I think that, I mean, obviously initially I started the fight on the SPS group with the debate around whether ROI should be measured purely financially. In the debate at the time, there was a measure based on fiscal XG, which
taxation.
Yeah, you know, the idea that fiscal XG for Sheffield United was in some way better than my club Sunderland, despite the fact with quite a small amount of investment in transfer, they'd managed to increase their sort of turnover by 100 or 200 million through one promotion. So I think if you're speaking about fiscal XG, then it has to be a financial measure. You know, to measure fiscal XG as brand seems mad to me. But I suppose the where I would get involved in a club purchase is normally after the buyer has made a decision which club is of interest. You then get in the data room and you think, look, are these numbers for real? What's unusual about these numbers? And the day-to-day running of every club is different. There isn't a standard way of measuring what commercial revenue is. There isn't a standard way of deciding what goes into a pot for hospitality and what goes into a pot for catering. So often clubs measure different numbers in different ways, so you very rarely compare like for like. Adrian?
So now I'm picking up on the point, Tony. Obviously, Sunderland. I'm assuming now the value of Sunderland Football Club would be significantly higher than the value of what the current owners actually paid for it. Would that be a fair assumption?
And I think that there is if he'd have sold the club, 30 seconds after, the 97th minute or whatever it was, winner at Wembley, then he immediately realises a return on investment.
So if we take that back, sorry, I'm not going to hog this whole thing, but back to the points that you made there, Megan, as well as to where the, where can you make ROI in a football club, obviously, and Amber, particularly in your space here as well. If you're playing a bit of a longer game and you buy a club, whether it be in the men's or women's game, and simplistically, if you get yourself set up properly well and operate the club effectively off the pitch, and yes, grow it commercially, which everyone looks to see where they can grow the commercials, but ultimately the biggest increase in value of your club will generally come if you deliver success on the pitch, and if you're an English club getting into the English Premier League, because the value of the club will be so great there, comparison.
So do we think the value and ROI are the same things, or value creation and ROI?
No, I think there's a multitude of layers to that as well, but someone else speak.
Megan, what do you think? What's the difference between value creation and return on investment?
I was just looking at the group chat, and Cedric asked me, what is unique about Brighton's model? And I think we have to look at first the benefits of the owner. The owner put a huge amount of money in. That's not unusual in any European football club. But there's transfer market efficiency. They've been the kings of buy low, sell high. Mm-hmm. And that is, take the commercial benefits that Brighton has had. They've been incredible at data analytics. You can thank Tony Bloom for that. But I think they've been the absolute kings of buy low, sell high. So in terms of getting your money back, that is, they've done it just in transfer fees. I wouldn't say they're a huge commercial success, but they've certainly run an efficient football club. And I'm not a Brighton fan. I'm a Chelsea season ticket holder. So I've got, Adrian looks like he's just going to go at me for that one. But
did you play a part in Donald Trump's appearance yesterday?
For God's sake.
Just thought I'd ask, I'm just linking Chelsea to American, right? But that's as good as it gets.
Easily done. But sadly, no, I was up there with the rest of the team going, what the hell is he doing?
Yeah.
But, no, buy, sell low, high, and that doesn't give you a perfect ROI model, but there just isn't one in men's football.
I want to go back to that point actually about, and I'm not sure we got the answer whether return on investment, Amber, and value creation were the same thing. And Adrian said they were value creation was multifaceted. So let's just we'll come back to that. But can you define in your terms then what you think ROI is? Amber, that's for you.
I think it would ultimately, it's something you set before you probably take the investment, monetary, non-monetary terms. And I think for different groups that will have different weighting. I don't think it will always be even 50-50. Some might look to build one part higher than the other. And also one might come after the other. I think that's probably the difference to something like value, like ROI. You judge at those like 1 year, 3 year, 5 year exit strategy points versus value is something that you're probably building all the time, and even in itself financial investment can bring in value, right? So it's something that's definitely live and ongoing. It isn't static, whereas I guess ROI you can kind of boil down into a more principled measure perhaps.
Tone, so going on from what Amber said there, then if long-term value is built, that, in my view anyway, equates to brand value, which can drop down to the bottom line in terms of how the brand then relates to its customers and turns into commercial, into money effectively. So would you agree that the brand value does have a part to play in this description of what ROI is?
Again, it depends on what the actual you're trying to measure. And if you are, football clubs in general, right? There's the big six, and then there are the odd club that's got something really quirky and interesting about themselves. So the things like whether that's Wrexham with their sort of, their Hollywood ownership, or hashtag United, or whatever that is. And then there is this whole sort of almost sort of, a wash of mediocrity of everyone in the middle, who is a club that's just struggling to make some sort of point of difference that you can then take to the bank. And if that is sort of, the Brighton model of being the Brighton model and doing it a little bit differently, that is still a point of difference, but still also can drop to the bottom line because of, the Brentford would probably fit in a similar sort of model there, right? Where it's a slightly different way of looking at things. But Brighton and Brentford were very much in this, as you say, this whole, and my club, Sunderland, was a team of grew up supporting as well, but trying to do it slightly differently with young players, etc. Well, and the fans have bought into that, and the fans come more often, and that does eventually drop down to the bottom line if you can make yourself different in some way. But I suppose the idea that there isn't any value to be had from a men's team, again, it depends on. There are clubs that are playing below their traditional level, can still get 20,000 on a good day, own their stadium, own site, own their land. The things that you would look for in what makes a good buy are still there if you know where to look. And
I think the challenge in that, Tony, is
the guys sort of all over that. Carry on. Sorry,
apology for talking across you at the end. I think obviously the race for the Holy Grail, so to speak, in England, and I'm very conscious that we're not just speaking about England here, because we're talking about global multi-clubs here, and there's some incredibly exciting markets out there all over the world at the moment. But you look at the Championship, which obviously is where everyone is really, often punishing themselves financially because of the race to try and get into the Premier League, because of the value of the club, the revenue you can bring, everything that comes with that, growing the brand globally, etc., etc. I think one of the biggest challenges for investors is when they first go into the club, and I think a lot of investors historically have really hurt themselves in the first 12 to 18 months, where they have maybe overspent on players, and then they can't reset at that point because the contract lengths that they've given with bad choice. That's often, and there are a number of examples there through the last 15, 20 years where you can look at that, and it does take a total reset at some point. But again, that comes with a lot of pain. But ultimately, the return on investment is, I think, Amber, you mentioned, what's the exit strategy? Does someone buy the club because they want to be the long-term custodian, because they actually enjoy it for sporting reasons? Well, increasingly, we're seeing a reduction of that type of investor because they're coming into this game because ultimately, that they're either in a race to get to the Premier League, or you look at the Wrexham project, or you look at the Birmingham City project at the moment, which are really exciting projects, and the brand that goes with that, and no doubt the wider context that comes along with that to people's business associated around it. There's so many layers to it that I think we're all saying the same thing at certain times here. It's about the type of investment you want to make and what you want to get out of it.
If I were to add to that, Adrian, and to build on Tony's point where he said there's the top six and then pretty much everybody else is the race to the Premier League, as you've just said, and that there needs to be points of difference, for some of these things to take place. So if you look at the Wrexham project that was mentioned, that's obviously celebrity backed. Look at Newcastle, which has obviously got a sovereign wealth fund. So do you need an investor that's got a profile and something about them to make that differential? And let's say, Megan, why don't you come in on that one?
I don't think so. I mean, it certainly helps. Any of the, multi-billionaire or Hollywood status certainly helps, but something that, I'm thinking about infrastructure plays right now. So good on Tottenham for winning a cup this year, but like their ROI is coming from a stadium. It's coming from an infrastructure project. And you look at a smaller club like Leyton Orient, Dave Gandler just bought Leyton Orient. He's had a huge amount of success in the world of streaming, maybe not so much with Paris FC, but look at where they are now. And he's going to do a multi-residential infrastructure project over in Leighton. I think he will see, and he's going to partner up with other sports. He's looking. It's a very American model to go with an infrastructure play, and I think that is, what Everton's doing. Everton women could possibly have a bigger valuation than Chelsea. Controversial, but because they have a stadium now. So I think that is the sort of thing, to people's points, if getting into a deeper community tie, et cetera, that could trump having Ryan Reynolds as your owner. I don't know. Maybe.
I'd add to that as well. You look at the Black Knight Group with Bournemouth, Union,
exactly,
Lorient, and which club is it in New Zealand as well?
Is it Auckland?
I think it is. All of them who are performing very well. So they are clearly putting a lot of sporting integrity into how they're operating. They're very skillful and adept at how they use the transfer market. You've got some real clever operators within that group. And, once they got involved in Hibernian, and they got heavily involved midway through last season, the team went from bottom of the table to being the most informed team, other than Celtic, the winners. By the end of the season, it's going to be, and they just spent £1 million, I think, for the first time in the club's history in the transfer market last week. So watching how they operate, the Black Knight Group, doing things slightly differently to, say, Brighton and Brentford, who are in that disruptor space for the size of club, is a real another fascinating angle to look at this.
Megan, on and your point just now about the American model, and actually this is a question to Amber, really, in terms of allocation of capital more than anything else. There seems to be a movement towards newer stadia and more infrastructural type projects. Are you finding that a greater percentage of capital that is being invested is going towards this more American model, if you like, of the stadia becoming a community centre, maybe better data and business intelligence systems within the business, and there is the MCO model that we've talked about that a bit. But fundamentally, have you seen as a shift in the way that capital, or to what capital is being employed towards or put towards?
Well, considering the influx of American money into European football and actually European sports in general, the infrastructure play makes it a more well-rounded asset. And I mean, please bring it on. Make these communities better. Make them more inclusive. Again, I'm functioning in the women's game right now, where we are developing our communities in the cities that we're buying in to ensure that there is a bit of regeneration in the area. So any investment into community infrastructure, I mean, that's it's very American. We go out and build stadiums, where come over here, you have almost 150 years of, infrastructure and history that we're contending with as Americans. And we're going to come in and bulldoze? Not quite. It's not really going to work like that. But, it's going to be a better investment overall than just the club. And again, look at what Tottenham's just done.
So Tony, actually that brings you in nicely, doesn't it? Tottenham, and let's say Plymouth Argyle. We've got a question from Patrick, who asks, how does a small club with lack of commercials, and I guess that's in relative terms, value create an ROI? And is that something like infrastructure, or is that more still creating on-pitch success to deliver an ROI in the longer term?
I think the holy grail for any club outside of the Premier League is to try and to run the off-pitch sort of organisation so that it doesn't matter whether you win or lose. And that is hard. That is really, really hard. So clubs try different things. I mean, Megan's point there, Plymouth Argyle are in the process of building a pitch which will primarily for the women's team, as well as being at the academy. So, by being able to do something for the local community, that pays for itself and gives some sort of ROI in its own right as a standalone model almost. Gives you, as I say, then you're not wholly dependent on whether Wayne Rooney comes in as a manager and gets you promoted or doesn't. I think but that is really hard, because there are 23 other clubs in your division trying to do exactly the same thing as you. And within that, last year in League One, there were 2 clubs who just blew everyone out of the water on the financial side on spending on players. So how does a club like Argyle is a really good example, who are trying to run sensibly, trying to run their off the pitch events, etc., are really sensibly run, designed for each property to deliver its own ROI. How do they ever compete? And I think you've got to try to survive so that it doesn't matter what happens on the pitch to whether your off the pitch business model works or not. And then if it does go well on the pitch, then guess what? You sell 16,000 tickets instead of 14, and it makes a difference.
Well, if I bring my beloved Luton Town back into this, clearly, they tried to, I would think, as a fan's perspective, and I'll come to that, is there a difference between what, the various parties within football, what they feel an ROI is? But from a fan's perspective at Luton, we put a lot of emphasis on spending the money from the Premier League into new infrastructure, the stadium, etc., to the detriment of the on-pitch activities, which meant that the club got relegated. So as a fan, I'm thinking that's not great. But do you think, Adrian, that the board, Gary Sweet and the team at Luton, that you think is just a temporary blip to build a stronger club in the future?
I'm pretty sure that, without speaking to them, that Gary and the guys at Luton, even though they're obviously greatly disappointed to find themselves back in League One, the club is in a much stronger position, undoubtedly, than what it was 5 years ago, 7 or 8 years ago. In fact, they've had the Premier League revenue, and they didn't look like they went go for broke. Unlike a lot of teams that do go into the league, I think you look at Luton. So I think Luton, in the end, it will be down to the football decisions, technical decisions, as to whether they're capable of bouncing back up again. But you look at a club like Ipswich, that's had US investment, okay, and then had the, I'd say Ipswich. I can't remember the price that Ipswich went for when they were in League One, when Mark Ashton brought the US guys across. But undoubtedly, that club is going to be worth a tremendous amount more now than it was when it was purchased. And yes, they had a relegation last season, but they've not killed themselves financially with what they've shelled out, and they've just made a big sale. They'll be one of the favourites to bounce back again. They've retained the coach, certainly as it stands. And they look to me like they're in this for sporting glory as well as ROI. Whether they've got a plan, and I'm not privy to this, as to when they may look to exit, I don't know. But if you're a fan of Ipswich Town, you'll be sitting there at the moment. I think you've been able. It's probably been way more palatable for them to. They can see what the club is doing on the pitch, and they're probably still pretty excited as fans, I would say.
Amber, is football inherently short-term, and that makes an ROI difficult to achieve from an investor's perspective?
So I just want to say something in regards to the previous points. I think the stadium redevelopment stuff is really interesting. And obviously the UK is nowhere near geared up enough as the US is for these type of developments, given local politics, national politics, etc. But I think there is also an element, though, that building extra seats is great, but if the seats can't be filled, that's also a capped revenue stream, right? Like, there is a limit on how much that will actually add. And if the tickets also need to be reduced, then it's a question of, was that actual development worthwhile? And I think that is something to think about, because building bigger is maybe not necessarily the answer, but probably building smarter and better is probably the balance that people need to think about. I think in terms of the nature of, people looking at a football club or an asset, I think, some people, it will ultimately depend on how much capital they're willing to plug and how long that, if there's many cash calls, like how many times they're willing to keep going to see the development change. Obviously, if you're looking for longer term development, stuff like building a brand, it doesn't happen overnight. However, maybe changing the roster and the players can happen quicker than that. So that will maybe lend to a more shorter term perspective, or shorter term actions. However, it's again just such a case by case example. And I think, just something to also pick up on earlier points is, the Ryan Reynolds Wrexham was an anomaly. That's not the rule, right?
Sure.
And it kind of can't be replicated, unfortunately, or it's never gonna be as good as that. And it's about ultimately outside of the Premier League Big Six, which are big business, billion-dollar businesses. The other clubs are local businesses, right? So how do any local businesses survive in this day and age? And if that's a short-term or a long-term view, it's going to be ultimately dependent on how much cash.
Why do you believe that the Wrexham model can't be replicated? If two other great Hollywood stars decided that they wanted to
There's
buy...
only one Ryan Reynolds, right?
Well,
So,
there
I
is
think
that,
goes
yeah.
without
There's
saying.
only one Jennifer Aniston as well, so that's just the way it is. But if two came in and bought Haverfordwest, for sake of example, how, and that's a small club, that's and that's a question that was to you actually, Megan, from Michael, around whether there was ROI, or is there a counter to Megan's point? He asked about the no ROI in men's football if you look to broaden the scope and go outside the glitzy higher leagues.
There's always, this is why I'm in women's football, because there is, we have a 10-year plan that we expect to break even at year 5 to 7, but we have a long-term plan for women's football. And at the end of it, I think we're looking at 29 to 39% IRR. It's not going to be insignificant, but we're not talking about the valuations of Chelsea. Our MCO Crufts football is at the middle market, and that is where our buy-in is. It's little to zero acquisition cost. So it seems like for us, it was an absolute no-brainer, but that's what I'm saying. I shouldn't have said that there is no ROI. There's always an ROI if you're smart enough to do it. It could be something as simple as your content monetization, by finding your international fans. I know that there are very random football clubs that have huge fan bases in Indonesia, for example. How are you monetizing that? So if these groups get very smart with their, fan content monetization, for example, and things that are happening outside the pitch, it's everything that happens outside the pitch that I think is going to make them profitable. Adrian.
Building on that point, recent investment in Rangers Football Club.
Yes.
And I think that will definitely be part of their commercial planning, with a club the size of Rangers, which obviously is a huge club in Scotland, a huge club in the UK, but also has a massive global reach that still has undoubted, untapped potential commercially, globally. And it was really interesting watching Andrew Kavanagh speak to the shareholders, I think about 2 weeks ago, which has been quite a volatile environment in recent years around Rangers. And he, standing ovation, answered a lot of questions, spoke incredibly calmly, give a lot of reassurance about in there for the long-term sporting success first. But these guys aren't coming along to play at this commercially as well. And I think that they will be doing a lot of what you've just been talking about there, Megan, with regards to their international footprint.
I want to move this on from there to men's and women's football. Amber, are you seeing that has there been a shift in capital in terms of those who are interested in investing in the women's game, whereas primarily maybe the vast majority would have gone to the men's game and a small percentage allocated to the women's game? And now, how are you seeing that's changing? And also, are the ROI expectations different from the men's game to the women's game?
Well, to tackle the latter part of your question first, undoubtedly. I was at a talk once and someone said, why is there so much pressure on women's sports teams to be profitable? Because there is obviously zero pressure on men's sports teams to be profitable. So, there is, a question that needs to be asked around that. It's all to do with long-term, cultural changes, institutional changes. It will just take time. That will come. Undoubtedly and positively and correctly. So I think in terms of types of investors and money going into that. It's investors, as Megan said, looking at the longer term, probably of all the assets or available, the longest of terms in these types of deals, and kind of embedding themselves much more firmly in the center of communities, in probably more like kind of alternative regions where perhaps there's like not so much access to sport in general. It's kind of going to create way more fan bases and people who will actually turn up and develop with the players who are also developing at the same time with the growth of the game.
And Tony, commercially, how are you finding that? Are you finding that brand partners and sponsors are looking to sort of divest, if you like, their traditional investment from the men's side more to the women's side?
I think there's a couple of different points. Firstly, I think it's quite difficult to get a sponsor if you don't have a women's team in certain cases. If you haven't made any sort of effort whatsoever to engage with women's football, and you speak to a big sponsor, they say, "What are you doing for women?" So that in its own right, there's enough reason to have a women's team or engagement with a women's team, if only just to engage better sponsors for your men's team. If you are running a men's team. So I suppose there is that, and I do think there's an opportunity to have a little bit more patience with the women's model and what the games look like and what the experience looks like. I mean, Amber made a really good point there, that this sort of rush, if you like, for profitability in women's football that isn't there in men's football is really interesting. I've never heard it sort of expressed like that before, and it's true. But I think at the same time, that often, so, right, okay, we're doing this activity because it is going to generate 100,000 new followers in Indonesia. There's so many owners of clubs say, well, how long is that going to take? It is this mythical, you've sold a player, you've got £1 million. What do you spend it on? How are we going to get this ROI? Right, okay, we could set up this content model which is going to drive fans all over. What revenue is that going to generate, and how long is that going to take? Compared to, should we just sign a left winger that might get us promoted? And that's this sort of instant gratification of where you spend that money, and sort of things like with academy investments, etc. as well, and where that extra £1 million can be directed to give you the best ROI within a club. The things that term ideas very rarely get that money.
So generally, do you think there's a mismatch between the I'll use the word ROI because obviously this is the topic of this discussion, but what investors, operators and fans want from their club? I find it, I struggle sometimes. If there's always that comparison with FMCG, and ultimately FMCG makes a product, consumer buys a product, there's a match. But it strikes me in football that the three parties want three different things. Adrian, maybe you're the best person to start off, and Megan, I'll come to you after that to see if we can get some sort of answer around, is there any correlation between those three outcomes?
If you're a fan, the most important thing is what happens on the pitch. You want great merchandise and you want a great place to go and watch your sport and you want to be connected with the club, but ultimately you want your team, if you're a loyal supporter or an excitable youngster, you want the team to be performing well. And to be fair, the owners that I've worked with, I'd say they're pretty hot on wanting the team to do well too. That's their first priority. There are other people within the organisation. I think what Tony just mentioned there, it's kind of almost a cabinet of people who sometimes not having different agendas, but priorities, and somebody wants something for the academy because that's the longevity of the club, and that's going to produce X and Y down the line. But you might have an owner or an investor who sees something, whether it be for gratification or ego, where they can go and do something quickly, but they can actually strengthen the team immediately, and that's why the genesis of this discussion about whether it was unfair of Chris Wilder to be let go at Sheffield United. Maybe the boardroom and Chris had slightly different visions for how they wanted to approach things moving forward. Because ultimately, and I don't know, and I've got no internal insight on it, but let's be frank, a lot of the tension in football clubs generally comes from that particular position. And it's what the owner in the end, or the investment group, are willing to keep putting in, year out. And there's owners that you will see now. There are some clubs that are in a bit of money trouble at the moment in our game, where owners have been there quite a long time without reaching the promised land. And after a certain period of time, it becomes very difficult for them.
Well, this goes back to my short-term comment earlier, or question, where football, or men's football, certainly seems inherently short-term because there's significantly more capital that's put in. There's a global fan base. I'm not saying the women's game hasn't, but just from a historical perspective, and therefore the pressure on that capital seems greater to me than it does in the women's game, Megan. And does that then allow the women's game to have that luxury of longer term because of those factors, of the less capital to an extent, and maybe less pressure as well to perform?
It's definitely less capital, but it's obviously no less important. To Amber's point, we aren't going to function as though we've got a target on our back to hit a critical mass in a very short period of time, because it's a long game. All of our clubs have very successful academies, and I think we're now starting. One version of ROI is the transfer market returns. We're starting to see very strong transfer market developments within women's football. And I have to thank the Americans for that, because, you've got a buy-in of $100 million to buy a license in the US, and you don't have that over here. So we are not only carving ourselves out from the men's club to be independent, but we have a huge amount of investor interest from the States who see us as, wow, we can get in for $5 million. We can get in for $2 million. We don't, and you can get us into Champions League. Yeah. So there's all of these possibilities, but it's a long-term play. If you looked at it as a churn and burn type of business, acquire the club, get it to 3 to 5 million, and then try to unload it for 10 to 15. You're not going to do that in 2 to 3 years. And if you try to do that, you've done nothing to develop the club in probably the best way, that's best for the women and the girls that are coming through it.
Actually, just on going back an earlier point, Tone, that you made about some brand partners and sponsors will only put money in if there is a men's and a women's team. I don't want to touch too much. Yeah, well, I do. I mean, do you think, and I was going to chuck a bit of a bomb in here, I think, do you think that actually that's just a CSR play and they don't really care about the women's side, but the men's side's what they want, but they can't get the men's side unless there is a women's side as well?
I think there is a subtle but different differentiation, if you like, between values and CSR. I think by saying CSR is, if you like, to do something because it's obviously your responsibility to do it, whereas values, it's about who you are. And I think if we value equality, it doesn't have to be that it's an essential element of sort of, we're not doing it to virtue signal. We are doing it as a club because we see value in having a women's team. And I think that's sort of, it's a subtle difference, but for some sponsors, it's just that because they don't want to put up with the criticism of saying, why have you sponsored this team? They haven't even got a women's team.
So Amber, I mean, CSR, so corporate social responsibility. Do you find that investors also have that viewpoint, or are they more sort of hard-nosed? I guess it depends on the type of investor, but let's assume it's high institutions and high net worths that you deal with. Are they much more sort of cutthroat in terms of the fact that, right, the return is coming from the men's game, and just is a question mark at the end of it, as opposed to a full stop, and therefore we're going to put our money into that, and we'll take the flack on social media, but by virtue of the fact that at the end of the day we're going to make a shed load of cash? That was a question at the end of all that.
No, interesting. I think that investors look at their assets, where's losing cash, where isn't, and there's obviously decisions that have to be made. But I'd say every, group or high net worth, etc., family office looks at probably something like a women's team or a CSR project in a similar ilk. Not that they are the same, but just in that line. They look at them as to how, I guess, valuable they believe them to be. And I think that investors are probably getting tighter with their purse strings, just given everything going on in the global economy right now, and just, lack of stability and stuff. So I think that kind of has probably impacted their decisions when it comes to looking at those additional parts to the business. But it's definitely not seen as not attractive or a kind of burden or anything. It's more just kind of a part of the operations and how they can make it better.
But then you've got someone like Jim Ratcliffe, for example, who's, cost cutting 40,000, because he's not cutting school dinners. But also the way he's treated his women's team at Manchester United. Now, is that typical, atypical of the way that investors, in this case high net worths, see the importance of the women's game within their investment portfolio?
Sorry, Emma. Sorry.
No, go for it if you want.
Isn't that back down to the individual investment organisation? I think you can look at big invested clubs in recent 2 or 3, 4 years who've come in and put a lot of money into their women's structure and propelled them very quickly through the pyramid. So they're competing either at the top level or the one below, having started well down the order, because I think they see the benefits in it for the right reasons as well as the commercial benefit.
So this goes back to the short-termism, I think. Sorry, Amber.
No, just something to add on, I think, as well is,
yeah,
I think it's all about making sure that the whole of the business is streamlined and geared towards the same KPIs on it. So if you have someone working in sponsorship, it's the same metric or commission that they'll receive if they work on a women's deal to a men's deal, or kind of longer term incentives to perhaps do more value in kind deals, or a sort of structure where you're pushing for more multi-year deals and things like that, and that people in the club are all supporting it as well. That's kind of probably something.
But if Jim Ratcliffe, Tony, has come in as a Manchester United fan with deep pockets, and I don't know him, and I'm obviously speaking for him, but surely his intention here is to make the men's side of the game stronger. So in his eyes, Manchester United, the first team, and the football club, the men's side, is structurally strong and can start to compete for trophies again. And Adrian's mentioned the word ego 3 or 4 times now, and that surely that all fits into one sort of system, if you like. And thus, on Amber's point, the women's game is insignificant. And again, maybe he's prepared to take the flak for that, because ultimately what he wants to achieve is a strong Manchester United men's team that wins the Champions League.
I think obviously the current structure within the women's game in England, which is the only one I know anything about really, is obviously gone through some changes in recent years to try and raise standards, but it's also made it very difficult for anybody to do it a different way. The idea, the minimum investment in etc. in sort of off the field and on the field for the structure of the club makes it very, very difficult for a club to build a club that's built around just their academy, for example. It makes it slightly harder to do that. To be in the Championship or the Women's Super League, you sort of need to have a certain structure which almost closes the door to clubs outside of the top half of the Premier League. Because if you're, I was unfortunate enough to be at Sunderland when they were in League One, and when you look at the balance sheet and you're looking at the amount of money going out of the door, and you've got this women's team that we sort of, fought hard to keep, despite the fact that it was, it was just an extra cost, if you like, at a club that at the time could have gone out of business. So there has to, I feel as if there has to be a multiple ways to do the right thing in women's sport as well. And obviously Megan's 10-year plan, if one of the teams found themselves in the top flight of the game in England, all of a sudden they have to spend X amount on just having a certain interest, and that might not be the right thing for that club because it's been built in a different way. If there's only one way to do it because of the Carney review, etc., and the current structure, then that literally closes the door to anybody other than Manchester United and Spurs to join the top.
You can always sell it, Tony.
So well,
always sell it.
And that is the thing, right? And that and then the valuation of what that's sold for, then all of a sudden, I'm not touching that.
Okay. Yeah, we'll move on from there. So I've got a lot of questions to ask you that come in through the chat of us as we've gone along. But there's a funny Amber mentioned this figure earlier because it's what I'd written down. I'm generous. I am Jim Radcliffe. I've got a mythical £100 million to give to each of you. How would you allocate it? So, you've got three areas. Let's have three areas you can allocate this 100 million. Let's go with Megan. Give me your three areas of allocation with the percentages, right? So 50 million here, 30 million there, whatever.
This isn't going to be like anybody else's answer because I would put it towards hitting a critical mass of 5 clubs in my MCO.
Okay.
One club in each country, European football. To acquire the majority of, we want to own the clubs 100% so that our MC model can actually work. So I appreciate that. That's a totally unique answer in this group.
Yeah, I should have come to you last, shouldn't I? Adrian, how would you use that?
Well, I like Megan's answer because in reality, if we're talking for an elite Premier League club, 100 million.
Or what's 100 million going to get you? Maybe half a player.
Maybe about
500. I'll be generous. 500 million.
No, but say on 100 million. So what I would say there is that the MCO aspect of it is really important, but not to buy 100%. You look at Tony Bloom at the moment, who's just bought whatever percentage he's bought in Heart of Midlothian in Scotland, on top of his investment that he's had in, is it Belgium? And I think that is a route for clubs that don't already have a strong multi-club model. That's a really efficient way of investing 100 million, which in the end is not going to transform your stadium, and it's not going to transform you off the pitch or your team on the pitch.
Right. Let's ask a couple of questions on MCOs then, because that's, we are going to come back. You've got more time, Tony and Amber, to think about how you're going to spend this bucket of cash I've just given you that's just gone up in value as well. So you're lucky. You've got 500 million each. Adrian asks, if you're an MCO, what you're measuring, Megan, is enterprise value and gain efficiencies on player pathways, trading, growing player value, etc. Commercial strengths are only available, but only to the ones who have a good story to tell. Tone, I think you made that point earlier. Story to tell, a brand that's investing, it gives them value times different markets and stuff. So I guess the question is how strong is that story that you're telling, and is there a multiplication effect in terms of then the value of that MCO when you're trading players between them?
Absolutely. And the great thing about coming in this new old sport of women's football is that we've put together a team that can help them create the story. Let's do the storytelling for the community, for the girls. We want each individual player to have their own. We want them to be influencers. We want them to be able to go out and start a business, or, another pillar of ours is any sponsor that does come in for us. And, we want the Unilevers, we want the Rexonas of the world. We want something to be pan-European, but our girls are going to get job experience and apprenticeships, everything paid through whoever comes in. That is literally just one of our pillars. This is all part of the story. We don't have the gravitas that men's football has. I mean, the Euros would like me to think otherwise. The World Cups would like me to think otherwise. But the bottom line is that the storytelling is going to come in because we're bringing all the great professionals in through our MCO and the shared model in order to facilitate all of this growth that we're anticipating. It's a very optimistic way of looking at the business, but there are very few things to not be totally optimistic about right now in women's sports. And like Amber works in women's cricket, so she can even attest to that. So it's
yeah, that's very true. This has come across as a point, Adrian, but we're going to turn it into a question. Nick Hart says a major benefit of the MCO model is removing the factors that erode the value chain. Internal movement of players reduces costs while protecting players, style of play and avoiding warehousing of young talent. All this reduces costs and drives revenue. I guess my question then is, would you agree with that as a statement?
If done properly, yes. Look at City Football Group.
Yeah. I mean, if they're going to Amber's and Ryan Reynolds' point, I mean, they are the shining light, I guess, of how an MCO could work.
Well, they're the founder of it.
So again,
They're the founder of it, really.
they are the founder of it. Yeah, exactly. Yeah, and Megan, does that transfer? Is that the North Star, to use a fairly average phrase, that you would seek to emulate?
I would say 100%, but it's it's a hard thing to do. But unless you have very, very strong academy systems, which the clubs that we would like to get invested in have very strong academy systems, this gives them a proper career and, proper research, proper data analytics. I mean, one of the things I'm looking forward to is building, inadvertently, it's going to be a product of having multiple clubs, is building one of the strongest data analytics systems for women's football that exists. So it was not never an afterthought, but that's a big benefit of having all of these, women in one system. But, the system, like, look at what Michelle Kang is doing. She's doing the same thing.
Yeah.
Like, the rising tide lifts all ships right now. And that's where we're at in women's football. It's not necessarily investing in Chelsea. It's investing in, yeah.
Yeah. So Tone, quite a couple of points are quite similar on here. Josh says that many football clubs or organisations are now describing themselves as media companies, and there's another question around creation and content and that sort of type of thing. But given the fact that revenues at football clubs are bound by the rights deals that are around, do you think that sort of that movement of, do you think football clubs will want to see themselves as content creators and brands in their own right when they've got the comfort of a rights deal sitting there and frankly there's no real compulsion to change?
Ooh.
Question. I'd phrase these things as statements, but that's the question.
What was the question and all that? Right, yeah. I think because it's the chicken and egg situation, right? Because the club would have to invest some money in making themselves into that thing, that entity. And while the money's there, we're back to that original, the lack of patience, the short-term thinking of many clubs. If they think, right, if I invest this money now and in 5 or 10 years' time, we might have a media company instead of a football club, most won't do it.
Yes,
one or two might, and then if they do a really good job, everyone else will copy them and follow it and do it in 1 year.
Amber, is that an opportunity then for the women's game to go, actually, this is what's holding men's football back? I know that sounds like a really strange thing to say, but actually our opportunities to break free of that traditional layering of revenues and create a model that's much more media friendly, content free flowing, that builds the influencers that Megan mentioned earlier. And actually that's the opportunity to break free of the kind of misogynist sort of tying of one or two to the other. Someone sent me a message yesterday and said, when Switzerland were playing the other night, they said, they lost to the Lucerne under 15 boys team 7-1. I was like, yeah, so what? But the two things shouldn't be anywhere related to each other, but we live in that society. So do you think actually the opportunity is for the women's game to become content creators first and foremost, that is obviously translated to on-pitch success, and that breaks the chain?
Yeah, but I think that's an opportunity across sport as a whole, to be honest. I think, it's probably more also in the lower leagues of football as well. And I think Josh or someone wrote in the chat, that the clubs need to become entertainment businesses, and if that's by producing content or putting on events, I don't know what the correct answer would be. It would be on a case and club basis depending on the catchment. Then why not? I think obviously the benefit that women's sports has is that it is seen as newer territory, and there's perhaps more scope for innovation, as with any kind of new opportunity, and that can be exciting, and less barriers to trying different things.
We've run out of time. This was an hour that went very quickly. Tony and Amber, you've got off the... I'll take back my mythical $500,000. Keeps going up every time I mention the value of that. But I'll buy you a drink whenever I see you next. I'm good like that.
I already spent it in my mind.
Yeah, I can. Go on. As you have. If you can do that in 30 seconds, you can tell us.
Now you put me on the spot.
Okay.
Probably take 10 to 10-ish% of a Premier League club and enjoy the ride.
There you go.
Love that
Marvelous
answer.
stuff. And on that bombshell, Tony Davison, Adrian Bevington, Megan Hessian, and Amber Pinto, thank you all very much for your time and your insights. And to everybody listening, thank you very much as well. And I think Kevin and the guys are going to do something later on, so I'm sure the discussion will continue on the chat. But from all of us, thank you very much, and have a good afternoon.
Thank you.
Thanks,
Thank you,
Sanjay.
everyone. Thanks so much.